Good morning, Bookmap community. Welcome, welcome. Hope everybody is having
Bookmap community.
a good morning so far. All right, well, what are we looking at here on the charts? First and foremost, my name is Charles. Welcome to the stream. I run a community called Piratetraders where we're focused on the ES, the NQ, and how it moves through the two-way auction process. This morning, we're going to be focused on the ES and what to expect coming next. The way I analyze markets is I look at them through a two-way auction process that is essentially a competition between buyers and sellers to see who is going to make the next move, buyers to the upside, sellers to the downside. And I would say this morning, I'm about 50-50 as to whether or not the market is going to break to the upside or the downside. I see the overnight range where the market traded over the weekend, which is essentially from 51.30 to 51.47. I see that as a chop zone this morning where the market is likely to grind sideways, and I see a lot of potential for a move to the upside if we can break higher, and a lot of potential for a move to the downside if we can break lower. So let's zoom out and get some context to understand where I'm coming from. Okay, well, we will start by looking at the monthly chart. If we start zoomed all the way out looking at the monthly chart, it can give us some insights on a much longer time frame as to what might be happening. So first and foremost, the first thing that jumps out at me, hold on one second, let me get my drawing tool up here. Boop, boop. All right. So the first thing that jumps out at me is the fact that we are no longer making higher highs and higher lows on the monthly. This month's candlestick broke the previous month's lows, so that told us the momentum up on a monthly time frame had come to an end. There is two ways, and again, it gets a little complicated here because I'm going to talk about balance and excess, and I'm going to talk about it on different time frames, and it might be doing different things on different time frames. So this is purely the context for understanding the monthly time frame. Okay? On the monthly time frame, the fact that we made a lower low, telling us the market was done going up, left us with two potential possibilities. One, we are either going to go sideways at higher prices, or two, we need a larger pullback with price. Okay? So all week last week, we were trying to figure out which of those two is the market doing on a monthly time frame. Does it need a larger pullback with price to come back and back test the previous all-time highs around the 4,800 area? Or were we able to just go sideways at higher prices and use time to balance off all of this momentum? Well, as of right now, the signal is time, and that is bullish to see. Bullish because it means price doesn't need a larger pullback on the monthly basis. It could just go sideways or higher from here. Okay, so now let's zoom in and we'll take a look at the weekly basis and see is there any more information that we can glean from the weekly basis. Well, the weekly, we saw the market completely rolled over. Not only did we make lower highs and lower lows on a weekly time frame a few weeks ago, but we started momentum lower. So that pullback in price on the monthly time frame was a version of balance, but on the weekly time frame it was a version of momentum to the downside. Well, now we are opening right at last week's high, increasing the odds that that momentum to a downside has likely come to an end. And from here, again, this is the inverse of what we just talked about on the monthly. But from here, the market can either stay down here at lower prices, balancing off the move down with time, or we could look for a larger pullback with price. That larger pullback with price, again, on a weekly time frame, would be looking to test the weekly high right here around, let's get an exact level, 52.12. Okay, so a move that breaks out of the chop zone this morning to the upside, finds support above the overnight high, above Friday's high, could look for continuation as high as 52.12. Okay. Now let's zoom in and we'll take a look at the daily time frame. On the daily time frame, we can see the same story that we saw on the weekly time frame. Lots of excess to the downside. We can see that story reversed back up, telling us the momentum was over, and we either needed to go sideways at lower prices or we needed to pull back with price. But now what the daily time frame is telling us is that we have momentum up. This candle right here from Thursday of last week is a little bit confusing because it looked like the market was going to balance with time. It looked like we were just going to go sideways at lower prices. But the fact that they immediately found support and rotated right back up and then didn't fail at that high on Thursday when, on Friday, is a sign that no, sir, we are not balancing with time. We are balancing with price. And that, to my mind, increases the odds we're heading up to test this trend line that we have from the highs on the daily time frame. So again, you're looking at about 51, mid 80s, okay, as potential resistance above. So in both of those scenarios, we are set up for one of two things to happen. Either we can get above the overnight high. We can get above Friday's high. We can spend some time. We can bring in some volume in both scenarios. Whether we're looking at it on a daily time frame or a weekly time frame, increase the odds the market can make a large move to the upside. But what if that doesn't happen today? What if, for example, we look above that overnight high and we just fail and we just pull right back in? Well, then odds are that we are in a balance area, much like this balance area here, and we are likely to head right back down. So that is why I say inside the chop zone this morning, inside this overnight range, between 51.47 and 51.30, it's really hard to know which way it could go because I could make a 50-50 case for either thing happening. But above this high or below this low sets us up for a much larger move. If we can get above that high and find support, we can head up to test those downtrends on the longer time frames. Okay? If we get below the low and we start to get resistance, we can head much lower to start repairing the weakness that we left behind last week. We've got weak references. The first major weak reference is the gap fill to 50.91. Then we got them at 50.72, 50.63, 50.46. You get the idea. So however we break out of this overnight range, whether it is to the upside, if we get continuation, we can look for a lot. If it's to the downside and we get continuation, we can look for a lot. And of course, if not, if either of those look above and fail or look below and fail, we will look for the market to keep going sideways in a tight range. Okay? There are some mornings where I open the chart and I just say to myself, I have no clue which way this market is going to go. I just have to wait and see what happens when that opening bell rings. I just have to monitor the market tick by tick today and see what information it's giving me. This is one of those days. I can make a 50% case for higher. I should say I could make a 33% case for higher, a 33% case for sideways, and a 33% case for lower. So we will just have to take it one tick at a time. Any questions on any of that from the chat? Good morning to Tom. Welcome to you. Ships is in the house. 5. He says, good morning. It was a quiet weekend. Yes, very quiet. Very tight range. DNK, good morning to you. Debbie B in the house. Mr. Ree is here. Jay says, good morning. Thank God it's Monday and the casino is open. Sheena, good morning to you. Nicholas is here. Alosis, good morning to you. Sebastian in the house. And Nicholas is here as well. So no questions on any of that. Perfect. Now we just have 20 minutes to fill. What we gonna talk about? Nicholas says, time to hit the like button. Jay says, hit that like button. NQ, please. Yeah, if we can get another like, I'll go check the NQ. One more like. Anyone? Anyone gonna like the stream? Like it on up. There we go. Got one. All right, let's take a look at the NQ. All right, let me start zoomed out, looking at the monthly, weekly, daily once again for the NQ. You might think it's a waste of time. You might say, Charles, there's no insights to be found in doing that, but I swear to you, it's very important. At the beginning of the week, give yourself some context, what this market looks like on a longer time frame. Okay, so it's the exact same thing as the ES. We are bullish on the monthly because we don't need any more of a pullback. This, weekly pullback here was enough. And we are bullish on the daily today if they can stay above Friday's high. You can see we've already made a new higher candle on the weekly time frame. So that is a sign the momentum down is over, leading to either going sideways at lower prices or pulling back up with price. So yeah, I would say the two markets are moving hand in hand right now. Yeah, I'd say the Q looks bullish. So it's the same exact story as the ES. We'll use the overnight range as our chop zone. So we will assume if they head up towards 17,930, they're just going to get smacked down. Or if they head down towards 17,830, they're just going to get turned around and get smacked right back up. But new buying above that overnight high is bullish for continuation higher. And new selling below the overnight low is bullish for or bearish for continuation lower. And any look below or look above and fail of the overnight range will lead to more sideways. More chop, more uncertainty. I would say the first upside target, if we do get support above the overnight high for the Q, is going to be 18,015. If it blows right through that, 18,150. Monitoring for continuation higher from there. If you get a resistance below the overnight low, below 17,830, I would look for a test of 17,720. And if they blow through that, I mean, even as far as 17,500. So it's the same thing as the ES. We got to take it one tick at a time, guys. We got to just see what they give us this morning. Does the market wake up bullish, or does it wake up bearish, or does it wake up with complete uncertainty? Once we see who's in charge this morning, it will give us a lot of context to carry forward. Sergio in the house. Sergio says if we go to the liquidity at 51.50 is long. If we go to liquidity at 51.50 is long. Okay, so what he's talking about is this very large red, section that we see right here in the Bookmap at 51.50. That is a large node of liquidity waiting to get filled. As of now, that is sellers. So any liquidity that is currently sitting in the order book that is above price has to be shorts. And any liquidity that's below price has to be longs. The only way that you could go long at 51.50 would be to wait for the market to get up there and then put the long in. Like a stop. If you had a stop buy up there. So as of now, one should assume that those are resistance. But honestly, it doesn't really matter. Right? We know intraday, generally these large nodes spoof away anyway. They just disappear. So even if we get there and it acts as resistance for a second, it could disappear and then we smash right through it. So let's just play that out, what that would look like in terms of price action. The market opens. It's grinding around. It's going sideways. It's poking. It's poking. It bursts through. It gets up to 51.50. It comes back down. It now starts to test the highs, the high from yesterday and the high from the overnight. We'll just call it 51.46, right? That's where we find out what comes next. It won't be the market poking above the overnight high that matters, because it might just be poking up to test that resistance. But if we poke up, that resistance disappears. That liquidity is gone. And then they come back down and turn the previous day's high into support. That is very bullish for continuation to the upside. So as I've said, with this liquidity, same as everything else, we just got to wait and see what happens. I will also make note of the fact that the overnight has created an extremely flat top right here. All the selling all night long at exactly the same place. So that just sets the market up, if they can get above there, to squeeze every single seller that's been selling in here. And you know what that does. You know what short covering does. It brings in FOMO buying. Ooh, it gets this market emotional. People got to get along so quick. Malang, good morning to you. Bust a move in the house. Tom says, does it seem like to you that the price moves different in the middle 70% of the profile compared to the outer 15 of each side? Well, that all depends. That's very case by case, right? On a rotational day, on a day where the market is balancing, yes, it does function very differently. And that difference should be time and tempo, right? So let's say you have a market that is, we'll just use the overnight market as an example here. You got a market that is rotating sideways, up and down, 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 up and down. It should be easier for the market to spend time and bring in volume. Let's expand out this overnight inside the value area. It should be very hard to do so out of the value area. So what you will see here is, as they get above the value area, they immediately get pulled right back in. They try to get above again, pulled in. Above again, pulled in. Above again, pulled in. Same thing with the lows. They try to get below, pulled back in. They finally get a little bit of momentum to the downside, and then boop, get pulled right back in. Get pulled right back in. They get above, they get pulled right back in. Okay? So what is happening is, because the market is balancing, this area in here, the value area where 70% of the trade over the weekend took place, that is essentially the fairest price to do business. So people are neither wrong nor right in there. You can go long, you can go short, and there'll be some argument you can make to think that you're right. So the market feels very comfortable there. So it should spend more time in there. And a lot more volume should change hands inside of there. As opposed to once it starts to poke out, that volume should get less and less. It should taper off. Because the further you get from the fairest price, the fewer people are willing to go long. The further you get from the fairest price, the fewer people are willing to go short. So you see less and less volume at the high and the low, and much more in the middle. And same thing with time. Lots of TPOs, lots of time inside that value area. Very little outside. Now, when the market has momentum, when it's trending, well, then it doesn't really matter. Because what matters is the momentum. Do they keep buying those dips? Do they keep selling those rips? That's what matters. But in balance, in rotation, absolutely. That's why we look at value. 5 minutes to market open. 5 minutes to paradise. Sorry. I'm so sorry. Jad's in the house. Good morning to you. Danai. Hello. Debbie B says, Charles, compliments to you on your trade management webinar from Friday. Best one all week. Appreciate you, Debbie B. If there's anyone in the chat that didn't see it, go check that out. It's very, very nice. And it's just a tiny little taste. It's just an inkling of what I teach in my workshop. That was 1 hour of education. The workshop is 2 weeks of education. So if you thought I went in depth on risk management, I go that in depth on every concept around trading to make sure that traders understand what is the best course of action in whatever the topic might be. Got another workshop coming up in 2 weeks. marketsinmind.com. Got a question here. Oh, never mind. Answering another question. Kaz, good morning to you. Jay says, Charles, please explain the ESMVPI. Yeah, so what you're looking at right here, this is a market pulse. It's an indicator that comes from Bookmap. And you can basically program it in to measure data in a bunch of different ways. I have it set to measure the volume pressure imbalance. That's the VPI. So it's just basically showing you which chart, which is the ES, and it's measuring the VPI. So basically, it's just measuring the amount of buying pressure versus the amount of selling pressure based on volume. So when it's red and it's moving to the left, there's more sellers piling on very quickly in that particular moment. When it's green and moving to the right, there are more buyers getting in that particular moment. And if you see these two little white lines on the edges, that's at the 92% level. If this happens to move to where more than 92% of the liquidity at that moment, like at that second, is long or short, it will make a little noise. It'll go brrr, and you guys will hear it too. And when it makes that noise, that is a way for me to know this is a moment I should look at the screen. Something is changing in the market right now, because you'll generally only get that sound. You only get that extreme of a difference between buyers and sellers if they are sweeping the order books. Why do they sweep the order books? To change the momentum of the market, right? So maybe right now we got tons of resistance up here, right? Tons and tons of sellers. We can see all these icebergs just sitting up above price. So if the market pushes up to there and it's able to poke through all of that, you'll hear it go brrr, brrr, and then that will be the moment to look at the screen and see what comes next. Because they either sweep the order books, whoosh, take out all those, all this liquidity that's trying to go short, and then they turn around and head right back down, or they take it all out and then they get new buying and they get continuation higher. So when I hear that pulse, when I hear that sound, I know there might be a change in the market. Either the move up is over and we're about to begin the move down, or we're about to start a whole new move to the upside. There it is right there. Happening as we speak. Sweeping through the order books 1 minute before the market opens. It's very choppy. That's a choppy thing to do. All right, the market is open. Okay, so we are opening above that overnight high. That is instantly bullish to see. We have higher highs and higher lows on the daily from yesterday. So that is bullish to see. To hold this momentum, I'm going to call it 51.44. They have to stay above 51.44. If they come back through, that makes this a look above and fail of the overnight high, which would be bearish for the market to look for a pullback down towards 51.30. But if they can hold the support at 44, we can look for continuation higher. Again, I say, it is bullish, but it needs confirmation. They got to hold the support. That's the exact thing the exact scenario I was just talking about. So what did I say with that overnight high? They sweep the order book, they whoosh, they force their way through all of that, and then we wait to see, does it lead to new buyers? So far, new buyers. Bullish to see. Okay, so we are now testing the first potential resistance to the upside, 51.53. That is the base of the H single prints down from the 15th. If that holds as resistance, we'll look to come back and test the support at the overnight high. If not, if it pushes right through, that is bullish for further upside continuation, and it's bullish for further upside continuation. Ladies and gentlemen, may I introduce you to short covering? Short covering also followed by its fun friend, FOMO buying. Short covering, FOMO buying. I gotta have it. Sheena says, Charles, how did you know the balancing would be with time and not price on the monthly chart? Because we didn't get continuation lower. Let's go out and let's look at the monthly chart. So if the market needed to pull back with price on the monthly chart, we should have had week after week after week after week of selling, right? Just another weekly low, another weekly low, another weekly low. But then when we zoom in and we take a look at the weekly chart, what do we see? Just now, literally here today, we made a higher high on the weekly. So that tells us we're not balancing with price on the monthly, or we would have kept going lower. We could have had the inside week. We could have had a week like this that's inside the previous week, but we would have need to have been at the lows here on Monday to get that thing to keep going lower. So the fact that we're above the highs tells us that that monthly time frame, that longer push to the upside, is balancing with price at higher levels. So if on a monthly time frame we don't need to go down anymore, what are we likely to do on a weekly? What are we likely to do on a daily? Food for thought. Okay, so right out the gate, as we pull back looking for support, what is catching my eyes? That iceberg sitting up there at 54, telling us that any chop down will likely find support and come back for that iceberg. How do we get the white points next to the footprint? I'm not sure what you're talking about. If you're talking about over here on the market profile chart, those are letters. Those are TPOs that you're seeing. If you're talking about over here on the Bookmap chart, the white letters are icebergs and stops. So you need the stops and iceberg setting. Good morning to Trevor, Will in the house, Tony McBride, Cool Beans, Vu, Percy, Michelle and Jeff, Kaz. He says, in your class, will you show us how to enter and exit a trade? Yes. So I will teach all my specific setups, how I enter them, where I enter them. And if during the live sessions, the market gives us any trade setups, I'll show you on the chart in real time as it's happening. But what you will take away from the course that I think is significantly more important than what are my setups, how do I enter trades, is you will come away with an understanding of how you can invent your own trade setups. Here's the thing. I personally don't trade today anything like I traded 6 months ago, which was nothing like I traded 6 months before that, which was nothing like I traded 6 months before that. I have to constantly develop my setups. I have to constantly recognize changing patterns in the market and adjust my approach to handling those new changes in the market. So that is the skill I teach in the workshop. How to actually be a trader. I teach you how to fish. I don't give you fish, right? I teach you how to think for yourself so that you can know how to create your own setups and adjust them in real time as the market is constantly changing. And that to me is the real value. So yeah, I'll teach you my setups, but that won't really matter. What will matter is when I teach you how to think the way a trader must think. Okay, so we're back to test the previous day's high, and we got no support there. We are now dipping into that overnight range. I am literally bullish if they can hold it right here, right now. Otherwise, this becomes a look above and fail, and you know what that means, kids. More chop, more sideways, more grind. So the buyers need to reverse and head back up for that iceberg at 54 right now. All right, buyers couldn't bounce it. You know what that means. Time for chop. So the next target to the downside is testing the VPOC at 51.33. I want to emphasize, this is not bearish to me. I am not bearish. I still think that the longer time frame, the momentum is to the upside. We were able to make higher highs today. We were able to make higher lows. Value is overlapping to higher. So there's no reason to think bigger picture throughout the day today, we can't still turn around and head much higher. If we're going to do it, it will be somewhere inside this overnight range. So we're now seeing this as a chop zone once again. We have uncertainty inside the overnight range. We will probably test this first volume point of control, but that might be all the market needs. It may just test that and then turn around and head higher. So I wouldn't be getting overly bearish right now. I'd be expecting chop and sideways and grind. If the market gets below the overnight low at 51.29, then we can start to talk about bearishness. But for now, it's probably just a dip to bring in them buyers. Good morning, Grizzly Bull. Sheena says, how do you know the liquidity above is selling short versus closing long? I don't, but the point is they are limit sell orders. So if somebody has orders sitting up here, let's say this liquidity of 51.55, right? If somebody has orders sitting in here and they're currently in the order book, it means that they are sellers. Now, is that somebody who bought down here that's planning to take profits? Or is it somebody that wants to enter a new short up here? I don't know. But that's what's cool. I don't need to know, right? If it's somebody who's looking to enter a new short down here, it'll act as resistance and the market will start heading lower. If it's somebody looking to take profit, the market will push through the resistance and get new buying above. So I don't need to know whether this is going to be new sellers or buyers taking profits. I just need to see what happens when we get there. And then I know whether I should expect further upside continuation or another pullback. It's a concept a lot of people have a hard time understanding. Going short, whether you're entering a new short or you're getting out of a long, it's selling pressure on the market either way. It's the follow through. It's what comes next that matters. Frito says such a FOMO erotic opening this morning. Yeah, it feels like it's going to be very choppy. It feels like they're going to get as many people long as they can and then wipe them out. And now they're going to try to get as many people short as they can and then wipe them out as well. Cool Bean says, I'm a pirate, not a fisherman. Listen, pirates got to eat. Steven says, it appears we have repaired the LM week reference from Friday. Yes, so that was a high that you're referring to, right? Yeah, that week L and M high, that was actually repaired the moment we opened above it. So if you open above a week reference, that is a weak reference that needs price to pass through it. It counts as that you already passed through. So these weak references are still here because they were below price at the market close and we're still above it. But the ones that were above it got taken out because we opened with a gap up. A little eensy-weensy gap up. DNK, can we look at NQ? Sure. Okay, NQ dancing right on the devil's door. So I would describe the NQ the same way as the ES. It is bullish in the fact that we made higher highs, we have higher lows, and we have value overlapping to higher. So if you put a gun to my head and made me pick a direction for today, it would be to the long side. However, they came right down to that overnight low and they left behind a weak low because they reversed exactly at that overnight low. So, that increases the odds they need one more poke to the downside. And if they start to spend any substantial time or bring in any substantial volume below that overnight low, it could lead to a pullback. So I would describe myself as bullish on both markets, but the NQ really needs a bounce or things could start to get bearish quick. The halfback on the Q is currently at 17,890. That is the next resistance above. If it acts as resistance, look for it to come back and test that weak low. If not, more sideways, more chop, more grind. Same thing with the ES here. We didn't leave behind a weak low, but what did we leave behind at the low? An iceberg, don't you know? So we got an iceberg on both sides of the market on the ES right now. That increases the odds of chop, of sideways, of grind. Any other questions for me while we watch the market chop sideways? Any questions at all? Let me know. What's on your mind? Oh, that I also wanted to mention, I got a bunch of emails this weekend about the workshop. If I haven't written back to you yet, I will do so later on today. I opened up my email this morning and was like, oh, shit. That's a lot of emails. Trevor says, how many screens do I use in my setup? Well, basically just one. The screen that you're looking at, this is everything that I look at in terms of my analysis. I have two other monitors. One that I use for entering trades so that you guys don't see the trades I'm entering, and one to read the chat on the YouTube. But if I was by myself and I wasn't a streamer, I would only need one screen. And this is exactly what it would be. Right here. Willie T says, I watched your webinar on Friday. It was very good. Thank you, sir. Appreciate you. Cool Bean says, one screen is the dream. I think the real dream would be to not even need the screen. If you could just trade with like your cell phone, that would be the real dream. But I couldn't. Look at this. Multiple icebergs at the low. Chop, chop, chop. This market wants to go. Looks very, very similar to what the high looked like before market open. So what did they do? They sat there and they kept the market in a very tight range. They kept shorting it at an exact place again and again and again, so that everyone's stops would be just above that overnight high. Then they immediately blew through it. Didn't even give you time to think. took out all those stops, right? And then they came back through. Well, now they're doing the same thing to the downside. They're convincing people to long right here with their stops just below so that they can come back down, whoosh, take out those stops. Oh, so choppity. And you can see, I mean, just looking at the big players, they took out 300 stops on that move up. They only got so far about, well, they got another 300 on the way down. So they're going to keep chopping sideways as long as it keeps working. As long as they keep stopping people out and then reversing the market. Cool Bean says, I run my setup on a tiny computer I bought for $300 off Amazon. It runs Bookmap and everything just fine on one screen. I laugh when I see those dudes with $5,000 gaming computers to trade. Well, I can't join you. I'm one of those guys. But I also live stream. That's my excuse. I do laugh at the people that believe more screens equals more success. It does crack me up. Now, if you were a trader who trades a bunch of different assets at the same time, like there are some traders that like, they'll be like at one moment, they'll be short oil, long the S&Ps, short, natural gas, whatever. Like they'll be like trading multiple different assets at the same time. Well, then it might make sense to have multiple screens. But if you're just trading one asset, one screen is plenty. Ad Pro says, hey, Charles, really liked your Friday Bookmap presentation. I'm moving in May, so I'll have to wait for your next workshop. Totally fine. It'll probably be a while. I probably won't teach another one until the fall. But yeah, you might consider in the meantime joining the brigade. There's a link at the top right corner of the screen. Piratetraders.io/join. That's only $10. And you can hang out in the interim between now and then and maybe pick up some insights. SS Cryptocurrency says, congrats on making it to Bookmap. Thank you. Okay, so now we're back. We're testing the halfback and the previous day's high. If this acts as resistance, it will increase the odds we're going to turn around and head back for the low. If not, if the market is able to blow back through the opening price, it is bullish. Let's see what happens. It is interesting to me that the moment the market started to break higher, they disappeared those icebergs. They got rid of the magnet at the low. And they repaired the weak low on the NQ as well. So these buyers have what it takes to break higher. Can they do it? Or will we get more chop? All right, well, unfortunately, I got to bring this stream to an end because I'm eating into Bruce's time. As far as the way I see things for today, I would say, if you were here at the start, I said I was like 33% we're going to go up, 33% we're going to go sideways, 33% we're going to go down. I would now say the odds favor going up significantly more. And that is because, again, I know it seems overly simplistic, but there is information in this. The market was able to push above yesterday's high. It did it first thing in the morning. It was able to get above yesterday's high. It was able to bring in new buyers. There wasn't many, but there was new buyers above there. So that is a sign of momentum. So far, these pullbacks in price have just been dips that have been bought up. So nothing has fundamentally changed with price and where it has to go. As long as we are inside the overnight range, we should expect it to keep going sideways. Okay? But if you put a gun to my head right now and made me guess which way it's going to break, and again, I'm talking about the ES right now, I would say it is a higher probability it's going to break to the upside and that the market is going to head higher today. And I'd be looking to test these 51, 64 to 67 area. Okay? Before I'd be willing to go long for it, I got to see them get back through that opening price, see some new buyers, but that is what I believe will happen. Now, the NQ, I'm less confident. To get me confident on the NQ, they got to get back up through the opening price. As of now, the Q is still saying more chop, more sideways, more grind. Okay? It's just not quite as bullish as the ES. If the Q gets back down below 17,830, its current low, it will likely get a little bit of a liquidation lower. Okay? As anyone who's been buying here, they only got to the halfback and then it instantly ran out of steam. So they are fixing to get squeezed at the low. So I am completely neutral, bigger picture on the NQ, but I am more bullish on the ES. I suspect we're going to continue to chop, but whichever way it breaks, we could get some follow through. As half the participants are wrong. Half the people, they're either going long or going short right now. And one side or to other is fixing to get squeezed whenever we break out of this overnight range. Food for thought. Thank you guys very much. I look forward to seeing you here next week. If you're a member of the brigade, let's head on over to the private stream. Let's set sail. Thank you very much, guys. We'll see you next week.